Hey, so if you are someone who's been thinking about buying a home, or you're a real estate agent working with people who want to buy homes, watch this video. We just got an update from the Federal Reserve. They dropped rates 1/4%. Now, reminder, when the Fed funds rate is changed, it's not a direct impact to mortgages. It is a direct impact to a lot of home equity lines of credit, but not mortgages. The rate they are changing is the Fed funds rate. It's a rate in which banks borrow and lend money overnight. So it's not a direct impact on mortgages. I know I said that like 3 times, but I get more calls when the Federal Reserve lowers rates than probably any other day of the year, because people think, hey, mortgage rates are going down. How do I get that lower rate? So here's what happened. The Fed lowered the rates. We were expecting them to do that. So that had already been kind of priced into the market because markets are forward looking. Now, they lowered the rate, nothing really happened. But after every meeting, the Federal Reserve makes an announcement on their policy going forward. And one of the things they said is in December's meeting, where we would have another opportunity for them to lower rates, they said that a rate decrease or lowering the rate in December was far from guaranteed. So because they said that, bond markets started selling off. And at the end of the day, we'll probably see rates a little bit higher than they were this morning. This has actually happened the last few Fed meetings where they lowered rates. They lowered rates. Everyone was expecting it. But whatever they said after the meeting caused mortgage rates to actually increase. Now, over time, they've seemed to trickle back down. But the point is, the Federal Reserve isn't a direct correlation to mortgage rates. So the last 3 times they've dropped the rates, mortgage rates actually went up. But this morning, rates were at 3-year lows. And we're probably still 1% lower than we were in January, and probably 2% lower than where we were last October. So we're kind of at 3-year lows still. So if you were someone who said, hey, I'm waiting for rates to drop to buy a home, well, guess what? They're lower. They're quite a bit lower than where they've been the last couple of years. Also, we're seeing some leniency in the buyer's market, meaning it's becoming more and more a buyer's market as we head into December and November in the winter. That's typically when we see buyer activity slow down. Now, that's good for you if you're a buyer, because that means less people you're competing with to buy a home. It only takes one other person to want to buy the home that you want to buy for you to lose your negotiation power with the seller. So right now we're seeing most of our clients get reduced prices on homes, seller concessions to pay the closing costs, seller concessions to get lower rates. It is a great buyer's market right now, and with rates being at 3-year lows, it is a great time to get out there before the spring rush. Every spring we see prices increase. If you go back and look at history over the last 10 years, every spring the prices are higher than they were in the winter. So if you've been thinking about buying a home, I think before the end of the year is a great time. Avoid the spring competition and rush. Take care of the negotiation opportunities you have now. Take advantage of 3-year interest rate lows and get out there. If you have questions for me, let me know. I am here to help, and you can call me anytime. Talk to you later. Bye.